Alright, folks, welcome back. This is the lecture 4 of the MTJ Live Trades Mentorship 2025. So, as you can see here, guys, right there in lecture 3, I've talked about the first presented fair value gap and the opening range model. I've introduced it in the previous lecture, so in lecture 3, and in this lecture, in lecture 4, I am gonna talk about the specific details about this model. So as you can see, guys, price has been pretty much bullish, and this is the previous week's this is this week's new week opening gap, and this new week opening gap that we can see here, this is from 2 weeks ago. All right here we can see it better right there, and the buy stops are taken. I'll mark this one out. So I'm not gonna do the top-down analysis right now because I've done it in the previous lecture and in lecture 1, 2, and 3. So in all three episodes, you guys know what the higher time frame bias is. You know the higher time frame bias and the analysis of the higher time frame because I've done that many times right now. So, but for the sake of clarity, I'm gonna do it a little. I'm gonna talk about the daily chart a little bit here. So here on the daily chart, we can see that price has been reacting to this order block, to the weekly order block. It is trading up. We created a new week opening gap here, the volume imbalance. This is a real gap, and there is also a gap here that price has traded up to. So here is right now the daily order block. The price might just react to it and start trading lower. Okay, and on the hourly chart, there is not really much to see. This is from yesterday. This is the London high has been taken, and the London low from yesterday is also in place right now. And we have this new week opening gap. And today is Tuesday. Okay, so not in this lecture, but in the next three or four lectures, I am gonna talk about the days of the week, and that each day has its own specific details that we should know. So Monday and Tuesday are most probably Monday and Tuesday is gonna be the manipulation phase, the power of 3 of the weekly chart. So meaning if a Monday and Tuesday price is trading up, this is the manipulation, and this is accumulation, and the distribution is gonna be on Wednesday, Thursday, and Friday is gonna be the close. So Friday is at the TGIF, price is gonna trade up, create a big wick on the weekly chart, and close a little bit higher. Okay, this is a very short explanation of it, but I'm gonna talk about the specific details in another lecture. Okay, so on the 15-minute chart, here, we can see that price has been trading higher today. So this is today's midnight open. Price has been trading above it and then below it, and then it started to trade higher. And on the 5-minute chart, we can see here, this is the London close. Okay, here we have the London close, London kill zone close. So we mark out the London high and the London low only from the kill zone, because London session goes actually to 7 a.m., but we're gonna just use the kill zone. So right here we mark this one out. This is the London high. Okay, here we have the London high. All right, and then we mark the London low. So this is the lowest low, this is the lowest short-term low or swing low. Right here it is left in place, London low. And I've already talked about the specific details about the midnight open and the 8:30 opening for the New York session. And right here we can see at the opening range, we have, of course, we have an opening range gap lower, I guess. Let me see for a moment. Yeah, actually right here, and price has traded to the consequent encouragement of it. Okay, so that means that price is gonna trade higher right now because price is also below the 8:30 opening right now. Okay, So right here is the opening, the close, excuse me. Here is the 4:14 p.m. Okay, right there, this is it. And we are gonna also mark out the 9:30 opening. Okay, in this case it is right here at this candle, this 1 minute candle. Yep, this is the open. So here, as we can see, I've talked about it, this is a 70% win rate. We have the opening range gap lower. Okay, and price has traded to the consequent encouragement of it. Right there we can see it perfectly. So this is enough for me. I don't want to see it to trade all the way lower and trade below to feel the opening range gap completely. Okay, and also retail traders think right now that price is gonna trade lower and trade to this new week opening gap, which might just happen, but in my mind price is right now bullish and it wants to, on the daily chart, it wants to reach for this order block, okay, to the bodies or just to the consequent encouragement of this candle. So it's gonna trade a little bit higher, okay, and then eventually it might trade lower, or it is just gonna trade higher and, you know, trade to this monthly fair value gap and use it as an inversion and start trading lower. Okay, so in this case we can see a strong price is strongly trading lower right now. Where's the first presented fair value gap? So I've talked about it, guys. You had a homework to mark out the first presented fair value gap, so I'm not going to explain it here. I'm just going to do it because I'm assuming that you have guys done that and you know what the first presented fair value gap is. Okay, so here price traded lower, but we have also a breaker, which is not a valid break for me because only the wick has traded below the short, but below the swing low, and it has closed above it again. So this is not valid for me, and this, I'm not going to use this one as the first presented fair value gap because this is not a clear displacement. Okay, so I am going to use this one. If here a fair value gap forms, I am going to use this one as my first presented fair value gap. Okay, because I also have a, you know, a close below the swing low, and this is gonna be a valid breaker for me. So let's see if price gives us a fair value gap here that we can use it as the first presented fair value gap. And I'm also gonna use the body right here, not the wick, because here is small. I don't know if you guys can see it, but right here is a tiny volume imbalance. So I'm gonna use this one, use the body, not the wick, as my fair value gap. And right here, there we go. You have it. Okay, this is it. This is my first presented fair value gap. So I'm gonna use this one as the first presented fair value gap. Opening range right here. We got it. Okay, so I want to see a trade to the consequent encouragement or just to the 50% level of this range, and then start trading higher. So this is a breaker. This is a bearish breaker. Let me see. Breaker. There we go. We have it. Yep. Oh, we can see anything. Oh, what is wrong here? Let me just refresh this for a second. This I don't know what's wrong here, but just give me a second. Okay, here we go. Yeah, whatever. Well, let me just connect the account. And here you can see, guys, this is just paper trading, no real money involved. I said that 1,000 times, but I'm saying it again. Okay, so here we have the 8:30 opening. That price has traded above it, below it, above it again, below it, above it, and then this is enough for me to start to trade lower. So I'm not gonna use this one as my short entry, or as because I want to see how price reacts around this first presented fair value gap. If price closes above this fair value gap, this first presented fair value gap, I'm going to use it as an inversion fair value gap and aim for the buy side, for the high time frame buy side liquidity, or at least for this buy side liquidity. And I'm going to use take a partial off here. Or if it's a different case, it's completely different scenario, it might just be that price starts to trade lower and I'm going to go short and aim for this London low. But right now, I have not enough information, so I have to wait and see what is price about to give me. So this is the opening range gap. This has been completely filled. Okay, so close above the 50% level of this first percent fair value gap. Let's see what it's gonna do. So in this case, if price starts to trade lower, I will use this consecutive up close candles as an order block and start to trade lower and use it as a short entry. But right now, this is all what I'm assuming, right? This is not what is actually happening in the price action. This is all, different possible scenarios that I'm thinking about in my head. So these are not happening right now. So it seems like price wants to trade lower. I want to see a close below this 3 up close candles, just consecutive up close candles, and if I get a close below here, below this swing low, I am going to use this one as a bearish order block. Okay, there we go. It seems like it wants to give me that, and I'm gonna aim for the London low. Okay, and here's the midnight open, or at least I'm gonna aim for those lows here from London session, but not London kill zone session, only London session. So I'm going to use it as the minor by sell side liquidity. Okay, it seems like it wants to give me an order block. Seems like, yep, there we go, we have it. So let me clone that for a second. Now right here. Okay, so there we go, it closed below the swing low. Let me take this breaker thing off. Here we go. Okay, now I want to see a trade higher to this order block, to the bodies, not to the wick, because they have a bigger body than the wicks. So I'm just going to use their body and not the wicks. Bearish order block. Let me change the color for the sake of clarity. Here we go, right there. Boom, boom. Okay, so here we got it. Let's go short. All right, this is my entry. So, and this is the important lesson that you guys, or we need to understand, that if price, we can assume beforehand all the possible scenarios, but we can't do what we want to see price do. We go with the price action, we wait to see what price is giving us, how price presents itself, and whenever we got the entry, whenever we got our model, then we are gonna take the entry. It's like a sniper. You wait, you have to be patient, and as soon as you have the target in your eyes, as soon as you can see the target, then you are gonna shoot. And you have to assume all the possible scenarios, where the target is gonna be, where the target is gonna move, where the target is gonna, which movements the target have. And then first, after all that, we can take the shot and go for it. So this is as I said, this is the minor sell side liquidity. This here is the midnight open. Okay, right here, which I don't know which level it is. Let me just look at it for a second. This is the midnight open. Where's the opening? Right there. So 20,138.8. This is the midnight open, and I'm not gonna be short below the midnight open. I'm just gonna aim for this level. This is for sake of clarity. I want to be safe in that trade. I don't want to hold it for too long. So this is a valid 1, 2, 3 trade. And at this point, we just have to wait and see what price is gonna do. It's possible that price starts to trade higher and go to the first percent fair value gap again and accumulate more, and then eventually start to trade lower. I have also here another, this trade above the 830 opening. This is enough for me. This is enough for me to think like, okay, I have a trade above the 830 opening. So now prices start will start to trade higher, lower. And we are also above the midnight open, which is another good sign. The price is in a premium, so we are only willing to be a seller. Okay. And at this point, what we got here? Okay, price is starting to trade higher. You have to wait and see what price is gonna do. All right. There's the first percent fair value gap. We can see this swing high. So this is a sweep of liquidity. This is a stop hunt. Price has been taken out this high again, right here, and traded above the A30 opening. So it starts to trade lower, but the A30 and the opening range gap is completely filled. All right, there's not much about this first percent opening range gap. And price might just start to trade higher and go against me, but this is completely fine because I'm following my model right here. And if it's a if it's a stop loss, I'm completely fine with it because I've followed my model and I feel good about this trade. So this is, I don't like this. I don't like this, consecutive up close candles. And another important lesson here is whenever price is really bearish, whenever you think price is actually really bearish and it wants to trade lower and reach for, discount PD arrays, you don't want to see price to trade above swing highs or above short-term highs. This would be not a good sign for, price, and it's a sign of it's not a sign of strength. So if you think price is really bearish, then you want to see a trade lower. So if you're present a fair value gap forms, I'm gonna close the trade. I don't like this at all. I don't want to see a fair value gap to the upside, a bullish fair value gap. I want to see a trade lower. Of course, we can say that we can also use failed PD arrays to take an entry and to take a trade, but for my model, for this specific model, I don't like this. I don't want to see a fair value gap to the upside. So at this point, it seems like there's gonna be a fair value gap forming. But still, this is not enough reason for me to close the trade because it traded to the, you can see it trades to the first percent fair value gap. It respects the consequent encouragement of it right here, closes below it in the lower quadroom. So now I want to see if price is trading to this fair value gap, to this BISI that just formed, and this trades to it and starts to trade higher, or if it's gonna use this fair value gap and close below it and use it as an inversion. So I want to see a trade below this fair value gap, a close below this one, and then price eventually use it as an inversion to start go lower. This is what I want to see right now in price action. So let's see. Okay, as I said, it seems like it's a loss for me today, but it is fine. It's only 1% of my account. It's not a big risk. It's fine with me. And this, it's close above in the upper quadrant of this first percent fair value gap, so this is not a good sign at all for me. Let's see what we get. Well, it's most probably a stop loss trade. It's losing trade, but it's fine with me because I've stick to the model. I've followed what my model is telling me, and if it's a losing trade, then it is how it is. So there we go. It's a losing trade, and it's fine with me. So I have the breaker here. So another possible scenario here would be that price closes above this first percent fair value gap and starts to trade higher, because it is also below the A30 opening, so it might just be the case and price starts to trade completely higher. But let's see what is price gonna do. So okay, it's still closed below inside of this fair value gap, the first presented one. We don't have a clear trade higher or lower. I want to see a close above it, and if I get that, then I will use it as an inversion. So let's see what we get here. So if I am gonna use a re-entry, I'm gonna make the position smaller because I had a losing trade right now. So this is a sign for me to enter the market again with a smaller position, because I had a losing trade, and it is possible that I might just be wrong again. So in this case, okay, I have a trade above the first presented fair value gap. So now I want to see a trade inside that. Also, there is a fair value gap. It might also be possible that price trades inside that fair value gap and starts to trade higher. But right now, okay, it starts to trade above the opening, the A30 opening. But I want to see a clear trade below it inside that first presented fair value gap, and I'm going to use this one as my entry. So best scenario is going to look like something like this. So this is the entry, this is the stop loss, and I'm going to aim for higher time frame buy sell liquidity, which is gonna be let me see. Okay, the buy side has already taken, so it might be just this level right here. Okay, 20,468.2. okay, 0.2. This is gonna be the buy side that I would be aiming for. Of course, this is the measure buy sell liquidity. This is not the minor buy sell liquidity. It's the actual buy sell liquidity that I would be aiming for. So let me just write it down. It would be faster. So buy side, what the hell is going on? Buy side liquidity. Okay, so and of course price might just not trade all the way higher to this buy sell liquidity, but I'm gonna use that as my pool of liquidity. I might just get out of this trade much sooner, Okay, well, unfortunately it seems like that I missed the trade. All right, here. Okay, seems like that we missed the entry, but let's see. Okay, so right now I'm gonna enter the market right there. This is a long trade for me, so we are gonna aim all the way up for here, and we are gonna use this one as the stop loss. This lows, we don't want to see a trade again below these lows. This would not be a good sign for me. So let's see what the price is doing. And of course there was today medium high, there's no high impact news drivers in the market today. So here Tuesday we can see the 9 a.m. there was the S&P, the HPI, and at 10 a.m. there's the new home sales. So these are the news release for today. So 10 a.m. here we go. This is this is right there. This is what we see. This trade lower. This is the news release. Okay, this is a trap for retail. So they think, okay, price is trading lower, but this is just a news release, and they're going to use it as an excuse to send price lower, accumulate more, and eventually start to trade higher. And I'm thinking that because we're below the A30 opening. And I am gonna use my Fibonacci in this case and use the standard deviations for taking partials right here. You can see it. Let me use the 1 and the 0.5 level right there. So right here I'm gonna take 10 contracts off, or 10 lots. And if this is a losing trade, I am not gonna re-enter the market again, because I am only allowed to take 2 trades per day, not more than 2 trades. This is the maximum amount of trades that I'm allowed to take on a day, okay? This is what my model is telling me. And this is the hard part of trading that I've talked about, guys. You can see that I am not perfect in trading, and my model is also not perfect, but it has a 60 to 70 win rate. So it might just, it's possible that this week and next week I'm just gonna have, you know, consecutive losing trades, but it doesn't mean that this model isn't working. It just means that, you know, my model is not working at this specific time for today. So price is very volatile today. I can see that trading very much is consolidating, higher, lower, and I don't like this at all. I like a trendy market that is very one-sided and it's trading in one side, but let's see if it trades lower and takes out this short-term low. So yeah, this point I'm thinking like moving my stop loss a little bit lower below this low, because price is very volatile today, and it's a possible scenario that it just trades lower and takes out this low. But yeah, let's just stop guessing and see what price is gonna do. So let me take this levels off. Don't want any confusion here. I'm gonna take 10 contracts here. I'm gonna take 5 right here as in another partial, because I had a losing trade. So I'm gonna use also this one for my partial. Okay, there are 2 partials, and then the last 5 lots I'm gonna let it just run and go for this buy side. Maybe it's gonna trade higher at all. So let's see what price is doing. So again, here is the first presented fair value gap. Mark this one out. Let's see how price reacts around that level. So now we also can see we have here a SIBI, a bearish fair value gap, a sell side imbalance, buy side liquidity. I want to see a trade above this one, above the SIBI, and close above it, and then use it eventually as an inversion. This is what I mean by, you know, whenever a PD array fails, we don't, you know, just put it away and say, okay, that was it, let's find a new one. No, we use the PD arrays, the old PD arrays, and whenever they fail, we can use it as an inversion. This is the, you know, interesting and cool part about trading smart money concepts. So here, I close above it, use it as an inversion. It might just try to the consequent encouragement, even a little bit lower, and that's, yeah, right there. This is a beautiful, perfect delivery. This is a beautiful, perfect delivery. Right here we can see consequent encouragement, right to the consequent encouragement to the 50% level of it, and then boom, starts to trade higher. Okay, and yeah, we can also use the bodies right here because there are small volume imbalances, but in this case I'm just going to use the wicks because it's this, you know, it's the more clear gap for me in this case. Consequent encouragement, okay. Now I want to see a bullish fair value gap form. Let's see if price gives us this. So let me for a second check the ES and see what the ES is doing. in this case the US 500, because I'm trading US 100, I'm not trading the futures market. So right here, US 500, it is the same as US, as the ES market. So here, this is a, I thought that this is exactly the case, and it is the case. So this is a smart money, this is smart money divergence. Okay, this is SMT divergence. So here we can see that price has took out this low. Okay, let me mark this out. Right here we can see prices took out this low, and on the Nasdaq or on the US 100 we can see here that it isn't the case. So it left this low in place. Okay, now many traders think like, okay, this is the sell side hasn't been taken out yet, so this is a, you know, these are relative equal lows. Price is gonna trade lower and take this out, take these two lows out. But this is not the case because we have SMT divergence. So yeah, this is the cool part about, you know, smart money trading. So here again, let me show it to you guys. Right there on the ES, price has took this low out, this swing low. And on the US 100, right here, it left it in place. Okay, so this is another sign for me to go long and go, you know, look for long entries. And right here we can see that price is again below the A30 opening, but the midnight open, we are not gonna use the midnight open in this case because price is far away. You know, it's not around the midnight open, so we are just gonna use the A30 opening for this New York session. And it seems like price is trading higher right now, so in this case I'm thinking like taking 10 contracts here, just because I had a losing trade. I want to be a break even for today. Okay, how much is that? 10 contracts is gonna be 300. Well, this is not a lot, but let's just take 10 lots here and 5 right here, and we are gonna let the rest, the 5 lots to go, let the price to run higher and take this out, this buy sell liquidity on the 15-minute chart. So let's see what price is doing. In this case I could even move my stop loss below this candle, below the fair value gap, the SIBI, but I'm not gonna do that because, as I said, price is very rangy today. It's consolidating a lot. I don't like this. You can see here it's taking the high out with a big wick. It's trading lower. It's taking the sell side. The first percent fair value gap, it traded above the first percent fair value gap right here, closed above it, and then traded lower, closed below it, and it's trading higher again. I don't like this at all. So this is why I let my stop loss to be here for now. But as soon as we have a trade above this short-term high, this swing high, I want to see a, you know, like a rocket fuel, a really strong trade higher above the swing high. And as soon as I got this, I will move my stop loss below the consequent encouragement, below the 50% of the first percent fair value gap. Let's see if we can get that. It is very unfortunate that I cannot, you know, show you a profitable trade with this model, because it is actually a solid model. It is easy, you know, it's very easy to trade, and it's easy to understand. But unfortunately, I don't know why, but the last 2 weeks this model hasn't been working as good as usual, because price action is very rangy and it's trading around in the opening range, and it's not one-sided, and market conditions like this model is not working really well. This model works really good when price is, one-sided and it's in a trending market. But right here we can see again we have a trade above the A30 opening, and then it started to trade lower again. In this case, I'm even thinking about not even taking partials, just to get out of the trade completely at the 1 standard deviation, because I don't like this market condition, and because also we don't have high impact news driver, I don't think that price will trade all the way up to this buy side liquidity. So it might just do that, but it is not very probable because price is very rangy and there is no high impact news drivers in the market today. So I'm just gonna use the 1 standard deviation and yeah, get out of the trade completely for today and be content with that, There's also the SIBI, this 15-minute this 15-minute fair value gap, this SIBI, the bearish fair value gap, which is also great for me because it aligns with the 1 standard deviation, the 1 minus standard deviation. So in this case, there are 2 PD arrays, if you want to call it this way, that are telling me price should trade to this level. Okay, so this is another great sign for me to get out of the trade completely here. Well, let's see what price is gonna do. So let me move this one right there a little bit lower to take profit. So this is a 104 point or handles trade. Okay, 104 handles. This is really a lot, and this is a good trade. Right here we can see it, 103 points. Okay, this is a good solid trade. So if it delivers as we expected, this would be a great trade. And as you guys see, I had it just a minute ago, I had this losing trade, and I'm not panicking about it. I'm not feeling bad or feeling sad and thinking like, oh, everyone on YouTube thinks right now that I'm a frog and I can't really trade, because it doesn't matter how good you are as a trader, you're always gonna have losing trades. Losing trades are part of the game. It's just part of this journey, and you have to have managed and calculated risk. So this way, if you lose, you don't feel really a lot of pain, because it's calculated and you have you're fine with this losing trade. So you guys can see I have only 20 lots in this trade again, 20 contracts. I've took 10 contracts off. This trade was about 30 lots, and right here I'm only with 20 contracts in the trade again. So I took 40% of the, no, not 40%. This might be, I'm not really good in math, so this might be just 30%. Yeah, 30% of the position. So I made the position 30% smaller. Let's put it that way. And I really don't want to, make these videos very long or talk for hours, but what can I say? The price action is not giving me what I want. So smart money, what the hell is going on with you guys? Come on. People want to see, a little bit of fun, a little bit of excitement. Give me just the price delivery and let me go and do my thing. So in this case, price has traded above the swing high, but yeah, it starts to trade lower. This is really, oh my god, this is so ugly. I don't like this at all. I don't like this at all. Whenever price trades above a high and then it's trading below it again, this is just, this is ugly, man. Come on, boy. Come on, give me that trade. Give me that money. Okay, so I'm gonna move my stop loss now. below the 50% of the first percent fair value gap. Here is the first percent fair value gap, so stop loss is just, you know, about how many points? It's about 7 points. Okay, 7 points below the consequent encouragement. So I'm fine with that. Stop loss is right here. We have a smaller stop loss, and this is ugly, man. This is not a good sign. This is not beautiful. It's trading above this high and then trading lower. This is just ugly price action. I don't like this market conditions. And I'm not telling that you can't be profitable in market conditions like this. All I'm saying here is this is not a, this is not a market condition that I want to be in. I really like one-sided markets. I like when price is, trending and it's going in one direction. It's not that rangy and it's not consolidating that much. But there are people, I'm sure there are people that they love market conditions like this and they are very profitable in market conditions like this. But this is not just who I am as a trader and as a person, and this is not, it doesn't align with my model. So this is what I'm saying right now. Okay, very cool. So seems like price is just consolidating again. So unfortunately I have to go in 20 minutes. I have an appointment. I would really love to stay here for another 20 minutes and just, do the analysis and analyze the market with you guys. But unfortunately I have to go. I have as I said, I have an important appointment. So I gotta go. I will go about in, let's say in 10 minutes. In 10 minutes I'm gonna go. So here price gave me that SIBI. This is great, but I want to see a close above this SIBI. If it closes above it, then I'm fine with this ugly market condition. It will make me happy, but unfortunately, nah, it's not the case. Trading to it, trading lower, but the candle hasn't closed yet, so you have to wait and watch. Alright, this is not good. This is not a sign of strength in the market. And there is also this order block, this 1 minute order block. That price is closed above it. Let's see if it's gonna take this low out. As I said, price is very rangy and it's not one-sided, and this isn't a good sign. So here again, another trade below the A30 opening and into that 1 minute order block to the lower quadrants of this order block. Let's see what price is doing. So let me actually take this off. This is very annoying. It's distracting me. I really love to, keep my chart as clean as possible, because I don't, all that, colors and all that things, they really distract me. I don't like these lines and colors. They just distract me from price action, and I really try to avoid these because it's stopping me from seeing what price action is actually doing. So I don't just want to assume what price action is doing. I want to see what price action is actually doing, is really doing. Even though it might be against me, but I want to see it. So this way I can, get out of the trade or move my stop loss. So let me also take this one out. Yeah. You can also use this one out. Yeah, this is the inversion that I've talked about. The price trades to the consequent encouragement and starts to trade higher. Let me take this one out. Don't need it anymore. We need this. We need the 30 opening, the opening range. The opening range gap, you also don't need it anymore because we know it traded below it completely. It closed below it. Well, first I thought it will just, trade to the consequent encouragement and then start trading higher. But this is not a clean displacement, as you guys can see. Because what is a displacement? We want to see a trade above the swing high, a close above a swing high or a short-term high, and we want to see a, valid fair value gap. So there's this tiny fair value gap. I'm not gonna say that this is a, valid displacement. So this is a valid displacement right there, but we know that price is today bullish, and I've talked about it in the beginning of this video. So yeah, let me take also this opening range gap off. We don't need it no more. At this point, I can move the stop loss higher to the, I can actually use this order block, the low of this order block right here. But in this case, because price is this range and it's consolidating that much, I'm gonna use the consequent encouragement of this wick, and I'm gonna place my stop loss just below the consequent encouragement, about one tick lower below the consequent encouragement. So this is extend to the right here. 5, take this one out, 1, 0. Okay, here. This is the 50% level. All right. And where is that thing? Center right, center right. There we go. So here, this is the consequent encouragement. My stop loss is just how much below it? 1 tick below this 50% level. So if price takes me out, I'm fine with that. This is a small risk. This is 0.1% of the account, and I'm fine with that. If it's a losing trade, then it's okay. And if it's a winning trade, even better. Okay, let's see. So I gotta go now. I'm sorry guys that I can't stay here with you, but I'm gonna let my computer on. I'm gonna record the trade, and you guys can see if it's a take profit or it's a loss, it's a losing or winning trade. And I hope you guys find this lecture insightful. I hope you guys learned something here. And yeah, till talk to you next time. Be safe.